Hello, welcome to the European Open briefing for Monday, February the 13th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the dollar is today extending Friday's gains, and this comes after that meeting between the US President and Japanese Prime Minister, where the US appeared to reaffirm the security alliance between the two countries, and that's had a positive effect on financial markets. The yen is much weaker today after the outcome of that meeting, and also impacting the yen is slightly weaker than expected growth for the Japanese economy in the fourth quarter of 2016. It's a fairly quiet day today, so much of the focus will be on Janet Yellen's testimony in Congress tomorrow and on Wednesday. But we've got some developments in commodities, particularly oil. Last week, oil had a sharp three-day rally, and later today we have an OPEC report which will show whether or not the OPEC countries are adhering to the output cuts agreed in November, December last year. But let's start with the dollar. And here against the yen, we can see that it's been rising since Thursday, so midweek last week, that which came after those comments by Donald Trump on the US tax reforms. He promised phenomenal changes to US tax policy within 2 to 3 weeks, and that led to market expectations that there will be some big cuts to corporation tax in the US, and that's boosted the dollar because lower tax would lead to higher interest rates by the Fed. Today, the yen, it briefly touched the 114 yen levels, currently trading around 113.65 yen. There was basically markets were pleased by the fact that the US president appeared to reaffirm the security alliance between Japan and the United States. Also, Trump did not mention anything about currency policy or currency manipulation, which the new US administration has previously accused Japan of. So it was overall a positive outcome of that visit by Shinzo Abe to the United States. We had some comments by the Fed's Stanley Fischer, who said that there is significant uncertainty from Trump's tax policies. So it does appear that the Fed for now is not necessarily factoring in big tax cuts in terms of its outlook, but we should hear more from the Fed when Janet Yellen, the Fed chair, testifies in Congress on Tuesday and Wednesday for this semi-annual testimony. This will be the first for Yellen since December's rate hike and those revised projections where the Fed said they foresee 3 rate hikes in 2017. So any signs, or at least any hawkish remarks by Yellen this week will likely lead to further gains for the US dollar. Let's move on to Japan now. We had that quarterly economic growth data for the Japan for the fourth quarter of 2016. It was a little bit below expectations. It came in 0.2% versus expectations of 0.3%, although the prior quarter's growth rate was revised up slightly from 1.3 to 1.4% at an annualized rate. Exports did well during the quarter, but domestic demand remains subdued. So that means that the Bank of Japan will likely maintain its easy monetary policy for a while longer. And the yen, of course, apart from the data, is also down on the improved risk appetite this morning, following that the tax promise by Donald Trump last week, and of course that summit between the US and Japan, which appeared to be successful. So that offset the heightened tensions in the region from another missile test by North Korea on Sunday. So for now, markets appear to be ignoring that fact. And here in the chart, we can see that the yen is broadly weaker against most major currencies. Let's move on to the euro now, because the euro is attempting to move away from Friday's 3-week lows. It's currently trading at 1.0650 against the US dollar. We still have uncertainty regarding the elections in France, Netherlands, Germany. the French elections are pretty much on the radar for investors at the moment, so that will likely cap any significant gains for the euro. Although we've got some easing of concerns regarding Greece's bailout program review. The Greek government said that they are very close to a deal with their creditors, although we shall wait to see whether they will manage to sort out all of their differences. We of course have that Eurogroup meeting later this week where we might hear more on the Greek bailout program. Moving on to commodities, and oil made some impressive gains last week. The gains mainly came from the EIA data on Wednesday that showed US gasoline stocks unexpectedly fell in the prior week, and this was a sign that we are seeing rising demand in the US, so that could lead to higher oil prices over the coming months. We also had a report by the International Energy Agency over the weekend that said that output in January fell by 1.5 million barrels a day, and that suggests that we are seeing 90% compliance of that OPEC non-OPEC deal by the countries that signed up to that deal, and we will see more what's happening with that deal when OPEC publishes an official report later today to provide an update. It's going to be a fairly quiet day today. We don't have any major data apart from German wholesale price index. So that's it from me. Thank you very much for watching and have a great day.